What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to sell off across the board and price action is now getting very close to some very critical support. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Also, please remember to smash that like button and help these videos reach 2,000 likes. Alright, today SPY was down 1.1% and we did close below the 50 daily moving average and we did close below that support at 401, which means we only have one line of defense left for the bulls, and that is going to be this level right around 393. If price action starts slicing down through the 390s, that is going to be extremely bearish, which means we are more than likely going to see significantly lower prices. However, the bulls know they have to protect that level, so we are going to know as soon as tomorrow whether or not the bulls are ready to push this thing higher, or we're going to see some type of waterfall wave of selling. Now, I also want to address the investors out there, and while we are risk off below SPY 416 as traders, which means we are in a short-term downtrend expecting lower prices, if you are an investor and you do not mind holding for the long term, I strongly suggest you don't stress out about timing the bottom. For example, the backtest that has never failed says the bottom is likely in, and the worst case drawdown was the 2008 bear market, which in theory, if we saw that drawdown, would take us down to SPY levels of 383. So you could be in accumulation stage right now, meaning you're buying as we go lower and not necessarily trying to perfectly time the bottom. Be very cautious if you're a trader. Trying to catch a falling knife is very dangerous. This is only for the investors that are going to hold their position for at least 12 months or longer. Do not stress out about trying to time the bottom perfectly. I'm telling you that because I know the backtested data shows that from these levels, we could start to run away and never look back. So if you are an investor and you do not mind holding for the longer term, you can accumulate as we go lower, and that is exactly what smart money does. Keep in mind, smart money has a lot of money and they can't just buy their full position in one trading day. So they are going to accumulate if they're bullish in the longer term as we continue to fall, and they're going to buy small amounts so that they don't move the market. Once that smart money is done accumulating, then we will start to run and we will likely see a sustainable bull trend until they start to sell again. So that is exactly what we saw back here. Smart money was loading up. They did not sell until we got to the 200 daily moving average on SPY. And if they're thinking about loading back up, they are very likely going to start loading up as SPY approaches this level at 393. So if you start to see a sharp bounce from here, that could mean this is going to be our higher low in our bull scenario. Now, if we lose that support at 393, all of that goes out the window and we are very likely building a much more bearish structure, which means we could go down and retest the lows. And that is still on the table because while the backtest said that has never happened, we don't ever want to get sold on a story and just assume it's not possible. So as price action traders, we need to respect this downtrend, which means we're not getting more bullish until SPY can get back over 412 and 416. As you can tell, the resistance trendline is a negative slope, so that could be a moving target as the days go on, and that is why we do daily analysis. So in the short term, SPY needs to reclaim this resistance at 401 and then try to get back over 412 and 416. And then we can likely say we have the higher low and we could attempt to go put in the higher high, which is more than likely going to be up there right around SPY 435. But we cannot look too far ahead. We are still in a downtrend. And we don't want to bother thinking about higher prices while we're below the resistance trend line. So we need to see the SPY bulls breaking out over 412 or we are going to continue to expect these lower prices. On a break below 393, we're likely coming down for this gap fill, and that is going to be right around 378 to 379. On the NASDAQ 100 triple Qs, we were down 1.1% and we came right down to some very critical support right around triple Qs levels of 300. And as you can tell, if you connect all of the lows, that is also going to be a support trend line right around 299. Now remember, the triple Qs are risk off while we're below 314. So as a trader, you need to respect the fact that we are in a downtrend in the short term, but there is going to be extremely strong support right around 296 to about 299. And if this support level does pass and we get a strong bounce and break back over 314, we're going to start thinking about the possibility this is the higher low in the triple Qs. Now the opposite is also true. If we lose this critical support, that will be extremely bearish, and then we will be looking for a retest of 287. To the upside, you're going to have resistance right around 305 and that resistance trendline area right around 314. So remember to respect the downtrend and the falling knife, and if you are taking long trades off the strong support level, Just be prepared to cut bait if we lose support, because you do not want to get caught holding any bags during a downtrend. In the Dow Jones, we were down 0.95%, and the Dow Jones is definitely giving us some warning signs because the Dow Jones lost the critical support at 319. This is extremely bearish, which significantly increases the probability that the Dow Jones is trying to go fill this gap below. So you need to be extremely risk off in the Dow while it's below 319. You can try to get more bullish if we can break above that level and turn it into support, but the resistance trend line is all the way up here right around 328 to 329, and we also do have resistance at 324. So do respect these downtrends and understand in a falling knife scenario, you never know how low it can go, and that is why you can eventually reach capitulation in a downtrend that can't find support. On the Russell 2000 IWM ETF, we were down 1.4%, and the Russell 2000 came right down to that support level at 184.5, and as you can tell, it did invite buyers at that level, just above the 50 daily moving average. We're risk off while we're below 191, and we can get a lot more bullish at the higher low is in once we break back over that level. But do respect this downside support that we don't know for sure if it's going to hold. We need to start getting a positive bounce and price action to show a green candle off support and break that resistance above. So set your risk right around 184 or the 50 daily moving average right around 183. And if we lose that support, we are likely coming down to 178. On the ARKK ETF, we were down 0.52%, and ARKK continues to close below 43 with the next downside support right around $40, and below that we're retesting low at 36.5. We need ARKK to break back over 43 and then back over 46 and then fully close that gap and start closing back over 47 to say that the downtrend is ending. Remember, this is a very strong bear market and the risk level is at 47, so you are currently risk off in the ARK ETF. On the VIX, we went absolutely nowhere, closing right where we closed yesterday, and intraday we did see a spike in the VIX, but we did close with the VIX getting crushed. However, none of that matters because while the VIX is above 24, I think you need to be risk off for a volatile market, and the next time the VIX crushes down below 24, that will be bullish and will likely go fill the gap down there at VIX levels of 21. On Bitcoin, we're currently down 1.57%, and Bitcoin is still holding this slight support level at 19,500, but the stronger support level is just below it right around 19,000. If we break below 19,000, the next price target will be 17,000, or if we find support here, you're waiting to get bullish until we break back over 21,600. This is clearly still in the bear market, making lower highs and lower lows, and it's going to be extremely bearish if that support at 19,000 fails. And there's still the possibility we could go to 12,000. But if you are bullish on Bitcoin in the longer term, you can start to accumulate at these levels as long as you're willing to hold for about 2 to 3 years. On Amazon stock, we were down 0.82%, and Amazon is holding that support zone right around 128. And as you can tell, it is starting to close some of the gap below. If we lose the support at 128, you're looking for the next support at 125.7 and then the full gap close at 122.8. There's no guarantee this gap has to get filled, but it's obviously highly likely while we're in the short-term downtrend, and we're risk off while we're below 136 and 138. So try not to get bullish until we see a positive bounce off support and we start regaining some higher lows and higher highs. In Microsoft stock, we were down 0.85%, and remember, Microsoft was the first stock that told us we were likely going to start looking more bearish because we lost that support at 267, and as you can tell, we are still in that falling knife scenario with no bounce in sight. Now, Microsoft is getting very overextended to the downside, well below the Bollinger Band, so it is possible we are due for a bounce, which should be good for the rest of the market because Microsoft is definitely a market moving stock. If we do start to bounce from here, look for resistance right around 268 to about 269, and we're not getting bullish until we can at least get back over about 274 to 279, and then we can start looking for some of those gap fills above. If we continue to fall from here, look for the next support all the way down in the 250s. On Nvidia stock, we were down 2.11% as we did close the gap yesterday, but today we continue to fall, and we're definitely getting overextended to the downside, but the next support is all the way down here right around 145. If we bounce from here, you're looking for resistance right around 161 and 165, and you're not getting bullish until we get all the way back above about 180. On Tesla, we were down 2.5%, and as you can tell, Tesla did lose the risk level and support right around 283, which significantly increases the probability we're coming down to about 270. Now you're looking for resistance at 283, and a rejection from there could take us all the way down to 258 and to fully close the gap at 250. So be very risk off while Tesla is below 283. Back above 283, you'll be looking for resistance right around 296 and the previous highs right around 309. And if we get a breakout above the highs, it's still possible we hit that next price target at 336. But as you can tell, in the short term, we are making lower highs and lower lows, and we just took out the support level. So do not blindly be buying something that's in a downtrend. Wait for confirmation and some type of support to hold. Otherwise, you're looking for the gap fill below. On Apple stock, we were down 1.53%, and Apple was extremely close to closing the gap to the downside, which is just below 158. And for the sake of argument, you could say that gap has been closed, but there is still about 8 cents left in that gap. So if you do have OCD, I'm very sorry to tell you that. From here, we could bounce to try to fill the gap above, which is just above 163. So you do have a little bit of a battle of the gap scenario. If we break down below the lower gap, you have support at the 50 daily moving average right around 156, and you're staying risk off in Apple while we are below 166. And if you want to try to catch this falling knife, you are setting your risk down here right around 156. On the financial sector, we were down 0.54%, coming back down to the 50 moving average. And so far, it does look like this would be a fair level to find support. But if we do break down, it is possible we try to go fill the gap below. The industrials were down 1.44%, getting very close to the 50 daily moving average, which is likely where it's trying to go to find support next. The healthcare sector was down 0.66%, starting to break down through our support at 126, which is likely going to be the right shoulder on this inverse head and shoulders. So you will want to be a lot more risk off if we continue to break down below this support. The energy sector was down 3.39%, getting rejected from that resistance and likely coming down to fill this gap, which is just below $80. You can stay bullish as long as we're above 78, but you need to get risk off if we break down below that level, because this could just be a lower high before the next lower low. So jumping back over to the S&P 500, without a doubt, this is still a very strong downtrend and a falling knife scenario. So be very cautious if you're trying to catch a falling knife, because there has been no confirmation that this downtrend is ending, and you do not want to blindly catch a falling knife. Make sure you are managing your risk very tightly, or just waiting in cash for some type of positive bounce off support and a regain of some type of uptrend. Even if you're shorting this market, make sure you are managing your risk very tightly, because you can still get very strong bounces even during downtrends. If you're looking for more help becoming a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get all of my intraday updates and analysis, and you can come trade with the Stocks Channel community. You can find out how to join the Discord server by clicking on the link below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking for more info about Bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.